What's up, everyone? I hope you're having a good night. Tonight we're going to be talking about Humanigen, currently trading hands at $2.16. This is not financial advice. Trade and invest at your own risk. As you can see, Humanigen moved down 2 cents today, and then after hours moved up 2 cents. So just a game of ping pong right now. Now, this is a stock that I've been following for a long time, like many others, but one reason I'm mentioning this one is Humanigen has finally been beat down to a level I've been recommending it at. As I predicted back on November 23rd, 2021, Humanigen would be a great buy once it gets beat down between $1.75 and $2. So that's where we're at now. And at that time, Humanigen was actually trading around $6 per share. So, as you can see, the 52-week high on Humanigen is $29.20. So, we're going to take a closer look at Humanigen and if it's worth your consideration or not, how analysts feel about it, and exactly what Humanigen does. But first, let's take a little bit of a look at the volatility. Humanigen has moved down about 18% the past week, about 29% down the past month, down about 71% the past 3 months, down about 89% the past year, and even on the 5-year chart, it's down about 85%. And of course, the reason I show you the 5-year chart is just to give you some perspective on exactly how badly the stock is beaten down. So I'm going to show you the candlestick charts and why I was looking for the stock to get beat down this low, and the levels where it was at the last time it was this low. Now, the last time Humanigen was this low was back in March and April of 2020 when COVID hit. So, or at least around this range. So that's why I was predicting we would hit the low of $1.75 to $2 based on a lot of different factors. But anyhow, again, I think $1.75 is a great worst case scenario, and $2 is a great entry price. And for those of you watching on TikTok, there will have to be a part 2, but 50% buy based on 8 analyst ratings. Take that with a grain of salt. The last earnings announcement was poor at -$1. Humanigen currently trading hands at 204. I got this video ready before Humanigen started dropping, but it is getting closer to my prediction and price target of $2, with $1.75 being what I feel is the worst case scenario. So again, good place to load the boat and get ready for a reversal in the momentum. So moving forward, please take the stock price targets for Humanigen by Wall Street Journal with a grain of salt. I just want to point out how unreliable these price targets are. The low is $6. Obviously, you know, again, the current price, this isn't accurate. I got this ready beforehand, but you know, they're saying the median 17, the average 17.29, the high is 30. That's not accurate, as I'll point out as we keep moving forward. And analysts who follow Humanigen on average expect it to increase 731% over the next 12 months. Those same analysts give the stock an average rating of buy. That average rating earns Humanigen an analyst ranking of 28, which means it ranks higher than, I think they meant to say 28% of stocks. 28 of stocks makes absolutely no sense based on data compiled by Investors Observer. Now, this is some potentially very good news. On January 10th, 2022, Humanigen aligns with FDA on potential registration phase 3 study for lenzilumab with CART3. FDA Type C meeting and advice creates alignment on registration pathway for phase 3 clinical development of lenzilumab for prevention of CAR T therapy. Related to toxicities include immune effector cell-associated neurotoxicity and cytokine release syndrome. Randomized double-blind placebo-controlled shield trial to commence in H1 2022 designed to inform potential label that reflects both the clinical benefit of linzolumab and the economical benefit measured by the reduction in healthcare resource utilization. Humanigen says we are very encouraged with the outcome of our meeting with the FDA, so potentially very good news here. Now we're running out of time and I don't want to do a part 5, but if you want to screenshot and read this, there's not much information. You just have to go through and read. But some information from October 8th. And Zach Investment Research cut shares of Humanigen from a buy to a hold rating on January 19th. And Cantor Fitzgerald reiterated an overweight rating on shares of Humanigen report on Monday, November 15th. Again, they should have done that much earlier when it was actually, the price was jacked up. Earnings were poor at negative $1.12. Now, posted on Wednesday, January 19, 2022, analysts anticipate Humanigen will announce earnings of negative 62 cents per share. So obviously this is more positive than the last earnings. Zacks reports. 2 analysts have provided estimates for Humanigen earnings. The lowest EPS estimate is negative $1.12, and the highest EPS is negative 35 cents. Humanigen posted earnings per share of negative 63 cents in the same quarter last year, which indicates a positive year-over-year growth rate of 1.6%. The company is scheduled to report its next quarterly earnings on Wednesday, March 9th, 2022. Now let's take a minute to talk about what Humanigen does. Humanigen is a clinical stage biopharmaceutical company. They develop a portfolio of immuno-oncology and immuno-oncology monoclonal antibodies in the United States. The company's lead product candidate is linzolumab, a monoclonal antibody that targets and neutralizes human granulocyte macrophage colony stimulating factor, which is in phase 3 clinical trial for the treatment of cytokine storm associated with COVID-19 and phase 2 clinical trial as sequenced therapy in combination with CD19 targeted chimeric antigen receptor T-cell therapies to treat patients with relapsed or refractory B-cell lymphoma, as well as that has completed phase 1 clinical trial in patients with chronic myelomonocytic leukemia. Now, I'm saying that slow in case anyone wants to know how to say that. Anyways, let's talk a little bit about what that is. What is refractory B-cell lymphoma? Basically, refractory means that the cancer is either not responding to treatment or it's not responding to the treatment long enough. So it just means basically it's just not responding to treatment, or if it was responding, it just didn't respond for long enough. So what is the chronic myelomonocytic leukemia? It's a type of cancer that starts in the blood-forming cells of the bone marrow and invades the blood. It's a rare type of blood cancer, and it's when there are too many monocytes in the blood, which is a type of white blood cell. I hope you all have a better understanding of Humanigen and what they do as a company. But I want you all to understand, when you're investing in a clinical stage biopharmaceutical company, it is a riskier investment because their growth and advancement as a company is highly dependent on emergency use authorizations leading to full FDA approval, and thus upward momentum in the price action. However, I think you will all see that with the price beat down so low, the $2 price entry I'm recommending is a great price to get in, with $1.75 being what I consider the most likely worst case scenario, a great place to consider averaging down. I believe we'll start seeing upward momentum from that point, and I'm going to be covering why I feel that way moving forward here. Posted on Friday, January 21st, 2022 by Market Beat, Humanigen has been assigned an average rating of hold from the 8 analysts that are currently covering the firm. Market Beat reports 1 analyst has rated the stock with a sell rating, which I have to stop a minute and say, that is just stupid. I see this all the time, and the time to post a sell rating was when Humanigen was trading for a much higher price. How stupid is it to post a sell rating when the stock is beat down and you have people out there losing their ass off, right, on the stock, and then you're posting a sell rating when it's at the point where it's beat down so low? The next step is for upward momentum, which I'm going to be covering the analyst price targets, and it's just, there's so much terrible advice out there. It's just, please keep that in mind to protect yourself. But anyhow, 3 have assigned a hold rating and 4 have assigned a buy rating to the company. The average 1-year price target among brokerages that have issued a report on the stock in the last year is $24.75. So to that analyst who issued a sell rating, let's just keep it moving. Posted on January 18th, 2022, Humanigen announced peer-reviewed publication in the Journal of Medical Economics demonstrating the clinical and economic benefits of linzolumab. So this is one I just don't want to really read all through this. If you all want to screenshot it and read through all that, we really need to keep it moving here. But I do think it's very promising and good news. And the reason I wanted to come back and cover this again is because you can look at institutional sentiment as either a positive or a negative. So if you're on Webull, obviously you can go on there and you can look at if institutions are increasing their holdings or if they're decreasing their holdings, or you can just look online for information. But this is a good indicator on whether they're bullish or bearish. Of course, with the stock beat down this low, like I said, I think we're going to see upward momentum once we reach that lower support level of $1.75. At worst, $2, or at worst, $1.75. Like I said, I think $2 is a good entry. But anyhow, that's why I wanted to bring this up. So when you're looking at a raise in holdings, as you see here, that's why I said you may want to screenshot this and read over it, because there's no point in me reading through all this. But I just want to reiterate that it's a positive when you see an increase in the stake of holdings for these institutional holders. It's a bullish sentiment, and obviously it's looking good. You know, they're increasing their stake and the price is low, so this is when you want to increase the stake. So even though, as I said, you see, you know, some analysts issuing sell ratings or overweight ratings, it's nuts. You know, you want to do that when the stock is way up here, and they wait to do it until it's way down here, and it's just insane, and it makes no sense. And that's why I'm just wanting you to keep in mind, there's just so much horrible information out there, you just can't listen to it. So I just want to reiterate, with the analysts average expecting it to increase 730% over the next 12 months, you know, a lot of you, you know, if you want to get in and play it safe, you can make a 600% increase and sell from there. 600% is not a bad return. Again, this is not financial advice. Trade and invest at your own risk. But, you know, again, it's 600% is not a bad return. Again, you can see how badly the stock is beat down. And although past performance is not an indicator of future performance, I think $2, $1.75 worst case price, in my opinion, is a great place to enter this stock. But thanks for watching. You all have a great day. I'll have more videos for you to come soon, and I will see you on the next one. Peace.